Hey guys, welcome back. And in today's video, we're going to talk about ASML and what they do and if there's even an investment opportunity to be had within this company. Now, first, let's start off with what ASML does. Now, ASML is a leading Dutch semiconductor equipment company that specializes in manufacturing and developing photolithography machines. Now, these machines are critical in the semiconductor manufacturing process as they are used to produce integrated circuits, ICs, or microchips found in various electronic devices like smartphones, computers, and other advanced technologies. Now, photolithography is a key step in the semiconductor manufacturing that involves transferring intricate patterns onto silicon wafers. These patterns form the basis for the electronic circuits on the chips. The process requires extreme precision, and as modern ICs consist of billions of transistors packed onto a single chip, it is a highly delicate process. ASML's photolithography machines use an advanced optical system to project the desired circuit patterns onto the silicon wafer, allowing for the creation of smaller and more powerful chips. The technology used by ASML is known as lithography and employs ultraviolet light to project the patterns with exceptional accuracy. The company's flagship products are known as wafer steppers and wafer scanners, which are used by semiconductor manufacturers worldwide. ASML's machines play a vital role in enabling the continued miniaturization and advancement of semiconductor technology, which has driven the growth and capabilities of various electronic devices over the years, just like Apple's M series chips, and practically all of the chips made by TSMC, a lot of them by Intel and Samsung. ASML continually pushes the boundaries of photolithography technology, developing more advanced systems like extreme ultraviolet EUV lithography. EUV lithography utilizes even shorter wavelengths of light to create even smaller features on semiconductor wafers, enabling the production of cutting-edge chips with improved performance and power efficiency. Now, who are ASML's customers? Well, ASML's machines cost over $150 million and are as big as a bus, so their clientele is obviously very limited to those who can afford and utilize the machinery. This results in their top 3 customers, TSMC, Intel, and Samsung, making up over 80% of their annual sales. Now, many see the concentration in customers as a negative, but I think it should be seen as a competitive advantage, given that their customer base includes all of the top players in the chip manufacturing industry. Another interesting and more recent development related to who can buy these machines from ASML is that since the West is trying to secure its supply of global chip manufacturing due to increased tensions between China, Taiwan, and the rest of the West, ASML has been able to sell its older machines to Chinese companies that cost less than their more advanced machines, but they are still able to attack that market with their machines. Now let's discuss their competitive advantage. And although lithography is a highly technical, high-level engineering concept, understanding its competitive advantage is not difficult. As we can see in this graph, ASML's market share is over 60% when looking at the overall lithography system market. A more important number is that ASML has an estimated 100% market share of the advanced EUV machines needed to make the more advanced 5nm and 3nm chips used in the more advanced consumer machines, as well as cutting-edge AI computers that NVIDIA uses, as well as others. Now, ASML is at the cutting edge, making 200 million machines that enable chip makers to produce the most in-demand chips. Now, ASML has been far ahead of its competitors for years, and as time has gone on, these competitors have scaled back and continue to lose market share, while at the same time, ASML has taken advantage of economies of scale. When TSMC, Intel, and Samsung are all fighting to bring the fastest, most efficient chips to their devices and customers, there is one company they must go to order to get the most cutting-edge technology, and that is ASML. The semiconductor industry is known to be cyclical in nature, but ASML seems to be somewhat insulated from that for the time being because they have a backlog of orders over $41.6 billion. Now, this further demonstrates the massive demand for lithography machines and spells out the future growth for the next few years as they step up manufacturing to meet those demand needs. Now that we understand ASML's position when it comes to the semiconductor manufacturing market and their dominance, the question remains, is it a good investment? And there are very many ways to evaluate whether an investment is good or bad, and the valuation that should accompany it. And some companies disrupt stagnant industries and gain market share, similar to how Tesla did with their electric vehicles, leading to a somewhat zero-sum shift from ICE vehicles to EVs. But another approach is to identify companies leading in a rapidly growing industry where the overall market creates new demand over the years. And ASML seems to fit that description. And as we can see in this graph, this is what many research groups project to be the total market value of semiconductor sales. In 9 years, it is projected to more than double. And since a lot of the demand would be for the most advanced chips, ASML would capture a significant portion of that growing market. And not only is ASML in an industry that will continue to expand over the next decade and beyond, but they also habitually reward their investors by paying a modest but somewhat sporadic dividend and by buying back shares at a substantial rate, as shown in these two graphs right here. And when I look at ASML as an investment opportunity, what I see is a company that is near a monopoly in an industry unanimously agreed to grow in the upcoming decade due to the growth in cloud, personal computing, and AI. However, with most things that are as clear as the strength of this company, there is always a catch. And in this case, the catch seems to be its valuation. ASML currently has a PE ratio of over 33 and a forward price to sales of 9.49. This means that a lot of their strong performance in the upcoming years is priced into the stock currently. However, this company has historically traded at quite a premium and still widely outperformed the broader market. So that isn't enough to just write it off as an opportunity yet. And personally, I started a position in ASML a few weeks ago and continue to dollar cost average over time, as long as the valuation does not get too out of hand, and I believe that they will outperform their own expectations as well as the S&P 500 and expand in somewhat unison with the semiconductor market over the next decade, making it one of the best performing mega cap stocks and companies. Now, this thesis is not bulletproof, and the valuation could certainly prove me wrong, and it could fall in valuation while still growing into the future, or it could not grow as fast as I expect it to within the future. So do your own research and determine if it's a good investment for you or not, and don't just follow me into something. And if you want more videos evaluating different companies, leave those in the description and I'll give them a look. And with that, thank you for watching. I'll see you in the next one.